An investment-positive regime is urgently needed in Malaysia to guide the business community and ensure there is no lag in the country's economic performance, according to Bauer Group Asia's analyst Hafidzi Razali. Hafidzi pointed out that political instability since the overthrow of the Pakatan Harapan government in 2020 had led investors to step back from Malaysia and invest elsewhere. In view of the current bout of political instability, he told FMT Business that investors had taken a wait-and-see approach and that it was possible for investors to be lured to more attractive investment destinations, more so in view of the urgent demands to mitigate supply chain and geopolitical risks. He said that a loose coalition, as the two successive post-PH governments were, was exposed to competing interests, which made it more difficult for investors to have a sense of predictability. Maybank Research said domestic politics will continue to be an overhang for ringgit-asset markets in general. Early elections would be well received by the equity market, especially if Barisan Nasional's current momentum could result in the formation of a more stable government post-15th general election, it said in a report. The research house said the strategy, which includes a shift towards indirect taxation via the reinstatement of goods and services tax, would significantly improve the country's fiscal dynamics, as well as reduce market concerns relating to the risk of continued recourse to corporate sector earnings to bridge fiscal gaps. It also pointed out that a more stable government would allow for greater focus and expedited execution on pending policy guidance and finality for a slew of large economic sectors such as aviation, banking, consumer, plantation, property, telecommunications, infrastructure, and utilities.